Hello, welcome to the Forex and crypto trading session. My name is Becky. Now I'm just going to put the disclaimers up here on the top left-hand side of the screen. So please read them, even if you need to pause the video to do so. It gives you an idea of what you can expect from these types of videos and these types of sessions. Now, for those of you that are with me live, I have my chat box open. So please do ask questions, point me towards certain currency pairs you want me to look at. Otherwise, I will go through as we do normally, explain a little bit of the background of what we're doing, but otherwise just crack on and place some trades and explain briefly why we're placing them. Now, I just want to point before we start to what we see at the bottom of the screen, which is telling you about our Mystery to Mastery series Forex trading book. Jose and I worked very, very hard on this, and we have released it now. It was officially published on the 31st of August. You can get it on places like Kindle on Amazon, or you can get it from Income Sparks or loads of other retailers. It starts as an ebook at $3.89, I believe, but you can go and check out what would be best for you. You can also get the paperback version if you prefer that. Okay, so also to point here to the link that you see, which is tradewithufos.com/Becky. So let me just bring that up to show you why this could be useful. So you have up here different apps, courses, and coaching that you can explore from this link. You can book one-on-one coaching with me if you'd like to. If you scroll down, and this is the most important bit that will help you most if you follow these sessions, this is where we keep a log of all the trades that we're placing per person. So for me, if it's tradewithufos.com/Becky, it's the trades I place in these sessions. And then you can track, if you come scroll to the end here, the outcome, the profits, the losses, the break even, why it might be a small loss or a small profit, how much that works out to, snapshots of the trades, and explanations of what's happening. So for example, if we take one that was a trailing stop here that trailed at a profit, trailed stop loss behind green UFOs, eventually stopped out at this specific price, and then you work out the maths there, average profit between both targets at whatever it was per lot, and you can check the link of the snapshot to see what I mean there. You can also take the one, for example, at the bottom, a small loss, tells you the candle that opened on the 31st of August at 6 p.m. opened at that exact price, and it was an unconfirmed climate. So we would have closed the trade early at a small loss of 3 pips or $31 loss. Oh, sorry, 31 cents loss. So it explains a little bit as to what's happening, why it is that these trades, if you were to look at them and you might say, well, hold on, that was a full loss, or actually that would have gone to your target. Why are you saying it's a small profit or a small loss? This is why. It's based on our trade management, and you can see the explanation in the notes and the pictures in the links. So use this, it will help. If you scroll down, you've got more information here about the different apps you can use monthly and yearly. We're about to be adding a new one here, which will be exciting, but we'll let you know when that happens. You can see more about our planner, our predictive options planner, which is our platform. And if you scroll to the bottom, you've got a question and answer section that can help to obviously get your questions answered quickly. Now, you can, of course, email me. You can email me, becky@tradictive.com, and I will always respond as quickly as I can, usually within 24 to 48 hours. If you post a question here, the answer tends to come sooner, but also you may find that the question you have, somebody else has already asked and the answer's already here. So you don't need to wait for a response. So you can use this for your help as well. Okay, lots of resources, lots of things I've just explained. Now let's crack on with looking at some trades. So I want to look at first the weekly economic calendar of FX Street, which should be standard practice when we're looking to trade. And I'm going to filter here by, I'm going to untick some of the individual countries here that are within the euro, or that we won't trade the specific currencies. So we'll take out China as well and take out Germany. I'm also going to filter by just high impact news. Click apply, and then let's just choose for the next week or so, so we can see the next 7 days worth of news. Now, why are we looking at news? not because we care what it says. Now, you might care what it says for other subjective reasons, but from a trading perspective, we don't want to necessarily be trying to interpret what the news is saying to then help us make our trading decisions. Some people do that, and if it works for you, fine. For us, we try and be a bit more objective and look at data and look at what technology is guiding us to do, as opposed to subjectively interpret a piece of news that might be subjectively interpreted another way by somebody else, and therefore you might be doing the wrong thing. So we are looking for high impact news because we want to know which news is likely to create volatility in the markets that we trade. So for example, we've already had news come out on the pound. Also bear in mind, with the Queen's passing, the pound might be a little bit weird for the next few days as we continue in this mourning period that we're in, which will officially end on Monday the 19th of September, which is when the funeral would be. So bear in mind, things are likely to be weird in British markets, and also the pound on Monday is likely to be quite quiet, actually, based on the fact that the funeral is taking place and most markets will be closed, most businesses will be closed. Now, we've already had news today on the pound, but we have news coming out at some point today. It will be a speech coming out that might affect the euro. We have some news coming out later on in the evening. So this is Eastern Standard Time, or Eastern Time at the moment. So later on in the evening, between 6:45 and 9:30 p.m., we've got news that might affect the New Zealand dollar or the Aussie dollar. So again, something to be aware of. Thursday, so tomorrow morning, we might see news that affects the US dollar as the markets open, 8:30 a.m. Friday, again, we have a speech at not a defined time that might affect the Australian dollar, the US dollar again, Friday morning at 10 a.m. The following Monday, we have the Aussie dollar. Again, bear in mind, the pound is likely to be less volatile on Monday. The Canadian dollar on Tuesday morning, and then the US dollar again on Wednesday afternoon, and the yen. So what it looks like, the markets that are appearing more regularly over the next week are the US dollar and the Aussie dollar. Now, there's different ways that we can choose to interpret that. We want to look at the data. We then want to have a set rule depending on our rules that are based around our own psychology. What I mean by that is, you could choose to ignore this entirely and just trade anyway, place as many trades as you want. What you are doing there is you will be placing more trades that could, with volatility, result in reward, but could, with volatility, result in more loss. But you could be choosing to say, I'm risk tolerant, I'll embrace that, I'll take the extra risk for the possibility of the extra reward, and that is your choice. That's who you are as a person. So that's how you're going to be trading. You might be the complete opposite of that and say, I will not trade at all for the next week any of these currencies at all. Now, we're not going to do that today. We're going to come somewhere in the middle and say, okay, if the US dollar and the Aussie dollar are more frequent, let's just be aware, and I'll remind you as we place these trades, maybe don't double up. Meaning, if we place a US dollar trade and you place that one as well, and we place another US dollar trade, maybe don't place that one, or choose which one you want. So you're not placing more trades on currencies that you know have a bit more volatility. What you could do as well is say, I'll place as many trades as I want, but for those currencies that have likely increased volatility over the coming days, I will decrease my risk. So instead of risking 1% per trade, I risk 0.5% per trade. Or instead of risking 2%, I risk 1%. Whatever that is, you can reduce your risk per trade, reduce the lot size, again, so that you can balance somewhere in the middle and take into account volatility without removing opportunity entirely. Different ways of looking at it, all of them are valid. Depends on how risk averse or risk tolerant you are. Now, we will still go and place whatever opportunities we have so that you guys as an audience have different opportunities, different options. But I will remind you to just be aware and come back and check as to the currencies that we're placing. If you are more risk averse, you might not want to place those trades. Okay, so again, I know I'm explaining a lot, but hopefully this makes sense as we now go into look at some new opportunities. So let me just, I didn't load this. Let me just load the Forex. Can't think of the word. I was going to say thing. That's not the right word. The Forex desktop. That's what it is on TradeStation. Now, we use TradeStation at the moment, and again, very soon we will be using another platform as well. But we use TradeStation obviously not to place Forex trades, but it helps us to be able to scan for trading opportunities. So once this populates, we'll give it another few seconds. Once this populates, we can see that this scan is doing a lot of our job for us. So rather than go through each individual currency pair on different timeframes, we can see very quickly which of the ones are more worth our time to look at. Now, again, that doesn't mean because the scan said it's worth our time to look at that we should go and place a trade, but we can go and look at it. It's worth our time to go and look at it. The others are not even worth our time to look because it's scanning different things. We're going to start with the daily climate of the US dollar, and I'll show you what I mean. So we have these little yellow boxes that tell us when an opportunity is near, meaning it's likely to trigger soon based on its proximity to the EMA. That's what it's doing there. So it's near. Now, we also have the words sensible and hopeful. Near sensible short, near hopeful long, near hopeful short, near hopeful long, near sensible short, near sensible long. We ignore the ones that say hopeful. That means that that market has been going in that direction for a little bit longer than it should be, meaning it is more hopeful to expect that it will continue to do that. So we want to look at the sensible option, which means that market has maybe only just started that movement to that direction, meaning there's more room for it to continue doing that. So we want the near sensibles. One more thing we add to this is that we have this column here. We need this column to be either red or blue. Doesn't matter either way, either red or blue. If it's gray, then we ignore that as well, because that means we don't actually have confirmation of the direction. So having explained that, and we're now looking at the euro US dollar and the pound US dollar, both near sensible short opportunities, and we will go and take a look at that. Everything else on this list, pointless to look at. So it saves us a bunch of time to be looking at each of the individual currency pairs before ruling out that it's not worth looking at. So we'll start with the euro US dollar, the nice and common euro US dollar. So let's move this over so we can see more what we're looking at. Okay. So I'm surprised not to see UFOs. Oh, there they are. Okay, so euro US dollar. We've got the daily on the left-hand side. And if you are using MetaTrader, which is what we'll use for the US dollar pairs, we'll then use TradingView for the cross pairs. If you are using MetaTrader, then you won't have the choice to use a Fibonacci timeframe on the right-hand side. That's the one that we would typically use. So instead, what we will use is the 1 hour timeframe on the right-hand side. Now, we will actually look at a variety of timeframes on the right-hand side. This is something that we do to give us the opportunity to find more opportunity. As long as the timeframe on the right is smaller than the timeframe on the left within reason, then we're good to cycle through maybe 2 or 3 different timeframes on the right-hand side to find an opportunity. Now, when I say within reason, we have a daily chart on the left-hand side. This means we are looking for opportunities where our trades will last a few days to maybe even a few weeks. So we're swing trading here. That tends to be, by the way, at least my preferred version of Forex trading, swing or position trading, or maybe even longer term. So if we are swing trading, so meaning we're using the daily to help us make decisions here. Do we go long or short? Do we, where do we take our profit targets and things like that? When it comes to them being specific about where we get into the trade, then on the right-hand side, we just need this to be smaller because it allows us to have a tighter risk rather than just simply sell because the bigger time frame says sell. Tells us where to sell and where to get out in our stop loss, gives us extra probabilities whilst managing our risk. So it just needs to be smaller. That's all it needs to be. But we've got the daily on the left-hand side and we're looking at the 1 minute on the right-hand side. It's too far away. It's too irrelevant to what's going on the daily time frame. So we use the 1 hour, and I will also look at the 30-minute and the 4 hour. So it's within that range. Now, saying that, at the moment, and this will be frustrating sometimes that this happens. Let me just Here we go. So you will notice that we have thick dots on our auto climate, thick red dots and thick blue dots, both of them there. We have lines as well. Ignore the lines. We won't focus on that today, just the dots. We have thin dots. We've got a thin blue dot here. And with the case of the data that's coming from MetaTrader, bear in mind in the universe of Forex, every platform, every broker I should say, is giving us different data. There's going to be spread differences. They're going to give us slightly different prices, which also means statistics change from broker to broker. Not always very often, but it does happen. As an example here, according to TradeStation, we have a confirmed downwards climate. That's a red box there. That tells us probability is down, confirmed down, and that we've got a sensible short on a daily chart of the euro dollar. Now, what the euro dollar is telling us on MetaTrader, different broker, different data, is that it's actually a thin dot, which means it's an unconfirmed climate. If it's an unconfirmed climate, we do nothing. It's the first thing we look at. If it's an unconfirmed climate, we do not have probability to the downside. Now, what we also see is that we have a green UFO here. UFO stands for unfilled orders. It's where we see buyers and sellers. A green UFO is where the buyers are. Price is just above the buyers. So we wouldn't want to be selling anyway, because we have an unconfirmed climate on MetaTrader, and that's the data we're using to actually analyze this trade. We also have buyers in the way. Why would we want to sell if there were loads of buyers in the way? So we are ignoring this, and we're going to come back to TradeStation to find a different opportunity. So the pound dollar, let's check that one out. Okay, pound USD. I'll just squish that. Takes a second. I know a lot of you use MetaTrader, but I don't use it particularly often. Sometimes it just takes a sec. So it looks like, if we just check here and squish this, it looks like we don't have any buyers below us. So potentially at an all-time low or close to. So let's take a look. I mean, that bodes well for our selling opportunity. Okay, so we have a thick red dot again now on MetaTrader as well. So probability downwards. We also have lots of sellers close by. So the opposite of what we just saw. We've got confirmed downwards climate, probability down, with lots of sellers on that bigger time frame, very close by to us. Price is just underneath them. So we would expect if price hits sellers, sellers push price down. Now, where specifically are we going to be selling? Now, this is where we're going to use our EMA. Referenced that very briefly earlier. We're going to use our EMA, which is 1.1578. That's this number here under MA. You'll see it there. 1.1578. If 1.1578 is the EMA, then I want to find a UFO on the right-hand side, sellers on the right-hand side, that envelop that EMA. Why? Because if price is below the EMA and hits it, generally people sell. Not always, but people sell. So we'll have sellers come in at that EMA, likely. If we also combine that with sellers that we see on our smaller time frame, then we've got sellers and sellers together around the same price in a context where we have probability down, so price likely to move down anyway, just adding to our probabilities. So at the moment, we do not see any red UFO on the right-hand side that envelops the number 1.1578, which is basically just above current price. We don't see any red UFOs. So let's look at the 4-hour, see if we have any there. Oh, using the wrong side of my mouse there. Nothing there. They're too far away. Now let's look at the 30-minute, see what happens here. Looks like nothing there too, unfortunately. So although we have lots of things going in our favor, we do not have a red UFO on the right-hand side. We don't have sellers on a smaller time frame that we can use to enter this trade. Now, these are our rules. We have essentially 3 main components that we need. We need the climate going in either up or down. Then we need the corresponding UFO. So it could be, if the climate is down, we want sellers, red UFO. If the climate is up, then we want buyers, green UFO. that coincide with the EMA. That's the three main components. We have 2 out of 3 here. We've got an EMA that's close and we've got a climate, but we do not have the UFO, so we do not trade based on our methodology. Again, you may choose to be more or less risk tolerant and say, I only need 2 out of 3. Or maybe you say, actually, I'm going to be even more risk averse. I need extra layers on top of that as well to meet my criteria. I have 4, 5, 6, 7 rules that need to be hit before I would be placing a trade. For us, it's those main 3. There are very rare outside criteria that would deter us, and I'll explain that if that comes up. For example, the proximity of buyers or sellers, the opposite of what we're doing, to us on the bigger time frame. But mainly, climate confirmed up or down, UFO that corresponds with that on the right-hand side time frame, that is enveloping the EMA. That's our rules. We don't have it here, so we don't have a trade. Let's come back and we will stick with the US dollar pairs if we have any. We're now going right down to a 60-minute climate. So this is more like day trading. If we have a 60-minute climate, which is the left-hand side, then we are expecting our trades to last a few hours, maybe over a day. The smaller the time frame, the smaller the length of the trade, or the smaller the duration of the trade, I would say. So dollar Swiss, oh, that's disappeared. Dollar Canadian, let's have a look at that. Dollar Canadian on a very small time frame. At least for me, that's a very small time frame. So with the dollar Canadian, if we have an hourly on the left-hand side, I'm going to look at the 5-minute and the 1-minute on the right-hand side. Just wait for this to load and see what we have. Whilst that loads, I'm going to take a sip of water and mute so you don't have to hear me do that. Okay, so we have a thick blue dot probability there to the upside. We've got a little way to go. So that loads again. Little way to go before we hit sellers that are up here. It's just loading weirdly here. Our EMA is 1.3176, which is just, if you see here, just above this UFO. In fact, it's also 1 pip above, or current price is 1 pip above the EMA. So close, but no cigar, as they say. We had the, if we rounded this up, so we'd have to round it to, actually, let me, EMA 3176. In fact, actually, with the rounding that we do, this should work just out, actually. So I'm using this number here, which is 1.31732. We're going to round up to the closest pip, which would take us to 1.3174. And then we add a couple of pips to buy orders for the spread. So that takes us to 1.3176, which is the EMA number. So we are literally just balancing on that right now. So we will take this opportunity. The US dollar, Canadian dollar, we are taking it on a 5-minute chart. Let's put the numbers in. We may miss the entry, but I want to make sure we do this properly. So this is the sheet that we use. I think brilliant. This is the sheet that we use that I will edit. You can use on tradewithufos.com/Becky. You can edit for yourself and save it, but it won't change the master file. So this is the master file. 1 hour and a 5-minute chart. We are going long. The entry 1.3176 as we worked out. The stop loss will be, I'm going to take this furthest number because we've got 2 buy UFOs overlapping each other here. So we want to put them together. So we've got 1.31639. We're going to round it down because it will be a sell order to 1.3163. We're then going to take away 5 pips for wiggle room. So that is our entry and our stop loss. We'll figure out our target 1 in a minute, and our final target will be the closest sellers here, which will be 1.3321. I'm just rounding down at that top number. 1.3321. Okay, so again, it looks like we may have missed this entry, but the UFO is still there. So we will come to trading view to place the trade. And the reason we're coming to trading view to place the trade, to be honest, is because I find it easier to place the trade in trading view. If you heard that noise, that is TradeStation telling me that the market's open. So thank you, TradeStation. Okay, so we had 1 hour and 5 minutes. Lovely. And I'm actually going to remove the UFOs here because we're going by MetaTrader data. If we are trading with MetaTrader, then we go by their data, not by TradingView's data. So the coordinates here. The entry was 1.3176. The stop loss was 3158. Lovely. And our final target was 1.3321. Nice. Okay. So let's put that in and then we'll put in the target one as well. So for me anyway, and again, each to their own on these kind of things. For me, I find that TradingView is so super easy to figure out what I'm doing and place my trades. You can connect it to a bunch of brokers, which is in this case connected to paper trading. But is that 1/2 of the trade in? But for me, I just think it's really easy to put the trades in and use the maths facilities, I guess. So same entry, same stop. I put a risk of $50. Thank you, TradeStation. Appreciate the notice. Here we go. I put a risk of $50 per half of the trade. We're placing 2 targets. One target is the one that's furthest away that we can see that we can take it to. In this case, we're buying, so we will take our profit where the closest sellers are. In the case of our first target, it's always 1-to-1 away. So if we're risking 18 pips, then we want to make 18 pips. It's 1-to-1, making this first target 1.3194. Come on, 1.3194. Again, really easy. I do it $50 just as an example. You guys will choose what makes the most sense for you. Please do not put risk on trades just because I do. It's up to you to choose, or even to choose not to do it at all. So placed on the 14th of September 2022, it was a 1 hour, 5 minutes. Brilliant. Took a second to put that on there, but there it goes. So we have our first trade of the day. This is a day trade. So what we'll need to do is keep an eye. If we come back to MetaTrader, because that's what we used for the data here, we've got a thick blue dot. If that dot changes to a different color or to being a thin dot, then we get out of the trade. Whether we're winning at that point, losing at that point, or even not in the trade at all yet. We cancel it if we don't get in it at all, or we close it for either a small loss or a small profit, maybe break even, if that happens. Now, if we find, in fact, it looks like we've probably been triggered in now. Let's have a look. Very nearly. What's the low? What's that one? We just missed entry there, but we'll see. It looks like it's a red candle. It may come down again. So if anything changes from a climate perspective on the left-hand side, then we wouldn't get into it. If price were to move off a little bit, so we've just missed entry here. Let's say it moves off a little bit before it comes back. We'd want to check that the EMA on the bigger time frame, we'll come back to MetaTrader for this. We'd want to check that the EMA from the hourly chart is still within our UFO. If it's not, then again, we cancel the trade before we get into it. But otherwise, providing those things don't change, we have our first trade of the day. Looks like we should be triggered now. Probably the spread there that's not quite triggering. There we go. We are now currently in that trade. We had the EMA lining up. So we are now in that trade. We will now only cancel this trade if the auto climate changes on the left-hand side, or we either hit our stop loss or hit our targets. Hopefully the latter, but we will see. Okay, let's come back to TradeStation and look for other opportunities. So we've rinsed, by the looks of it, we have rinsed what our probabilities are from the US dollar side. So we will now solely be using TradingView to have a look at our cross pairs, coming back to the bigger time frames, starting now with the Aussie Canadian. Now, bear in mind, as we said at the start, the US dollar has some news coming out over the next week, quite a few different days that might affect volatility. So you might not want to place any US dollar trades at all. If you do, you might want either big time frames, lower risk, or less correlated trades. Aussie dollar, same thing. We saw that pop up a couple of times. The bigger the time frame, the less that's a problem usually, but we will see. So I'm just going to place that. Okay, so we will start with the Aussie Canadian. Let's go and take a look. We'll go a little bit quicker now because we explained a little bit already what we're doing and why we're doing it. So hopefully we can take that forward. Oh, that's why I was confused why that was still showing me that. Okay, so we have put our UFOs back on screen here. Interesting situation with UFOs, and we'll see in a second. So thick red dot, probability down. However, price is currently at 0.8870. The EMA is at 0.89, so it's within this red UFO. Let me just see if we've got room for this, because we may not. No, we don't. Okay, so what I'm doing here, and I'll do it exactly for the numbers just to show you. So the entry, 0.8873 it would be, all the way through to 0.8908 plus 513. Okay. So yes, this UFO, and we can see here the EMA is within that UFO. Brilliant. However, we want, as we know, two different targets. So this is one of the situations where we have an outlying piece of criteria that might deter us from placing a trade, even if those three main pillars are hit. This is one of those situations. We have two targets. We have one that's as far as we can take it, which is defined by, if we're buying, it's the closest stack of sellers. If we're selling, it's the closest stack of buyers. We also have a first target, which is a 1-to-1 away. The final target should always be further than 1-to-1 away. Otherwise, in our opinion, it's not as worth it to take the trade. Now, as we can see here, if we look at on the daily chart, if our target, our second target, which is meant to be the furthest one, and for this one it would be this, once we rounded that up, is going to be where these buyers start, and we want a 1-to-1 trade in between. Let's just clone this. There's not enough room. So we can see now visually that our 1-to-1 target would be further away from us than our final target, furthest target. That doesn't work for our rules. So we do not place the trade. There is no need to. We don't have the room to make profit out of it, essentially. That was a quicker, more concise way of explaining that. Let's look at the Aussie New Zealand. Again, bear in mind that today we have news coming out on the Aussie and the New Zealand dollar. So bear that in mind when it comes to your risk tolerance. Okay, Aussie New Zealand. Nice, this was a trade that we took last time. Be able to check on the log there whether it was a profit or a loss. Okay, so we have thick blue dot, probability upwards, and we have no sellers above us, which means we've got room to take this to the upside. Don't have anything in the way for now. Now the EMA is 1.1192, which is nice and snug within this UFO. So brilliant. Let's place that trade. Very easy. Sometimes it's as easy as that. It would be great if that happened all the time. So the entry price would be 1.1198. We're adding a couple of pips in order to counter for the spread. Then our stop loss will be 1.11864. Round it down to 86. Take off 5 for some wiggle room. Takes us to 1181. And we can see here that EMA number, that blue line, is nice and snug between our entry and our stop lines. Brilliant. Now, in this case, we will not have a second target that's predefined. So we'll put that in a second. Let's put our first target in first. Again, I'm going to put an example risk of $50. You guys do whatever you want. Don't place it at all. Risk 1,000, risk 1, risk whatever you want. Okay, so that's the first half in, and that takes us to 1.21. Sorry, 1.1215. Great. I'm just going to place this on the spreadsheet as well. So this is a Aussie dollar, New Zealand dollar, 1 day, 55 minute. We are going long again. Long, yep. Yep. And it is 1.1198 to 1.1181. It's quite a small risk actually there. The risk there would be 17 pips. Now, just to check here, the risk per lot, this is a helpful tool to help figure out what your risk per lot would be. So if you had 1,000 units, so 1 mini lot, then that would be a risk per lot of $1.02. So the minimum you could risk on this trade is $1.02. So our safety target was 1.1215, and our final target will be trailing. Now, just to show you what we mean by trailing. So in this case, again, we're going to have $50 risk, same entry, same stop loss, same risk, but no profit target. Because we don't have a base where we can objectively say that's where sellers come in, and so we'll get out before then. We've got no sellers. So we place the entry and the stop, and what will happen is, if we're right, price comes in, starts to move away in our favor, creates a new UFO, green one, then we move our stop loss from there to behind the green UFO. Price continues to move up, new green UFO. We move our stop loss from where it was to behind the new green UFO. We're trailing our stop and locking in profit behind new buyers. Now, the reason we do it behind new buyers is because buyers in theory push price up. So if price pushes back down through those buyers and hits the stop loss, chances are it's changing direction. So for now, we will have it as a trailing stop. Put a little note, helps me to see what I'm doing. Placed 14th of September 2022. It was 1 day, 55 minute, and target 2 was trailing. Again, it just helps when I come back and look at this and go, where's my other green line? I've got a note that tells me, future me, what current me is doing, makes it easier to track. That's our second trade of the day. Coming back now to TradeStation. We looked at Aussie Canadian. We've just put a trade on Aussie New Zealand. Let's look at the pound yen. I like this as well, by the way, because we've placed a dollar Canadian. Now on Aussie New Zealand, those currency pairs, there's no crossover there. We're about to look at the pound yen. Again, no crossover. Ideally, that's what we do. We're not placing Aussie New Zealand, Aussie Canadian, Aussie Swiss, Aussie dollar, pound Aussie, I think I said Aussie New Zealand, whatever it is, the Aussie many times. Because then if something happens in Australia that affects the currency, you could be stopped out on all of those trades. You could equally, if something happens that affects the currency to your favor, maybe you're right on all of those trades, but you are doubling, tripling, quadrupling your risk by trading the Aussie many times. So I kind of like that it's just worked out that we are now looking at the pound yen, which has nothing to do with either of the two trades that we've already placed, which is great. Okay, pound yen. Nice. I'm just checking, by the way, on the chat box. Let me know if there's any, could be cryptos or could be currencies that we look at. I do tend to look at currencies more so than cryptos, generally because they're more readily traded at the moment. That might not always be true, and tend to be less risky, again, depending on how you see things. So I tend to stick to those. But if you guys want me to look at specific cryptos, by all means, tell me. And if you're watching the video and recording and you'd like me to go and look at some cryptos, then send me an email or post it on the question and answer section, and we can spend more time on cryptos perhaps next time. Okay, so pound yen. Similar situation, we have no sellers above us. So we are going to have a trailing stop for our second target if we place a trade. EMA is 164.91, which is within this UFO. Now, as we can see, we've got a couple of UFOs on top of each other. So we will use both of those together. Nice, that again, very easy. We've got a nice straightforward trading opportunity. So 165.10 through to 163.59. Okay, that's our entry and our stop loss. Let's figure out what our first target would be. It's quite a wide risk. So for example, that's $10.54 of risk per lot, which again, that might be fine because you might be risking hundreds of dollars per lot, in which case you'll have many lots. But just be aware, you might not want to do that. So reasonably wide because it's 151 pips, which is wide, and it's because we've got two UFOs on top of each other. The wider the risk, obviously the harder it is to hit 1-to-1, because it's got to go now 151 pips in our favor just for us to break even, which is harder to do than it going 20 pips in our favor to break even. However, it's within the rules. We've got room to take it, so we will. Let's put that first half of the trade in. Second half of the trade, same thing as we did before. It's going to be a trailing stop. Same entry, same stop loss. No take profit. Let me put that in there. Okay, so placed 14th of September 2022, 1 day, 55-minute, and it was target 2 trade. Brilliant, that's the third trade of the day. Again, I'm just going to make a note on the form here, again, just so you guys can see it. I'll take a look at a second so I can show you the update and how quickly it updates. 55-minute, this was long. 165.10 through to 163.59. 151 pips. Safety target at 166.61 and a trading stop loss. Okay, so if I show you this now, if I come back to tradewithufos.com/Becky, and let me just refresh the page. Okay, brilliant. So now you can see we've got these 3 trades that we placed today, all there, 14th of September. I need to fill in the risk and the risk per lot for the first trade we placed. But otherwise, you can see all that information there. So we will see what happens with these trades. I'll update it and you can come and take a look. Now, whilst we're here, let's have a look at the US dollar, Canadian yen, because we placed a small trade with that. We went long here, so it's a 5-minute, wasn't it? Oh, 5-minute. Just wanted to see where we're at on that trade. Okay, so let's just squish that out. So we currently still have a thick blue dot, so probability is still up. However, obviously it looks like price is pushing down. We nearly, very nearly hit our safety target, but haven't yet. Currently pushing against us. So the next hour, which will be my 3 p.m., so it'll be in 12 minutes, if that dot, the new dot that appears with the new candle, is not thick blue, meaning could be thin blue, could be thin red, could be thick red. If it's not thick blue, then we cancel the trade and we close it out at whatever we're at, whether that's half of our proposed risk, whether that's slightly at a profit by that point, whether that's really close to our stop loss by that point. We close it out because we would no longer have probability to the upside. It is still currently showing probability to the upside, so we'll stay in the trade, but keep an eye on that as the clock turns to that next hour to see what works best for you in terms of what you're going to do there. Okay, let's see. I think we've got a chance for 1 or 2 more trades. Let's take a look. So we've got the dollar, Singapore dollar. Let's have a look at that. Don't often trade that. Let's have a look. Okay, US dollar versus the Singapore dollar. Thick blue dot, probability upwards. what we want 1 day and 55 minute, because that's what we were looking at on the scan. Okay, so we have sellers here, still reasonable distance away, obviously depends on the size of the risk here. Now on a 55-minute chart, we've got UFOs a long way away, definitely not coinciding with our EMA. So let's take a look at a 1 hour. Very same situation. We could also look at a 4 hour. Very same situation, even worse. So not enough, or not lining up in terms of the 3 main pillars that we need. We've got the climate, we've got the EMA, but we do not have the green UFO in this case. So no trade. Moving on to, oh, that's it. We've exhausted what we've got in terms of near sensible opportunities on a daily climate. Let's drop now to the only near sensible opportunity on a 240-minute climate, which is the Euro Canadian. Again, I think completely different. Oh, Canadian again, but otherwise different opportunities. Euro Canadian on a 4 hour on the left, which means we're going to do 21 minute on the right. But again, we'll cycle through if we can't find opportunity. Euro Canadian. Okay, so the EMA is 1.3154, not currently lining up with this time frame, but let's have a look at a 30-minute. Also not lining up there. Let's take a look at the 1 hour. And let's take a look at the 15-minute. Okay, not lining up, so no trade. Now, just to show you, if we look at TradeStation, we already looked at the daily climates for the US dollar. We have no more opportunities here in terms of smaller climates. We looked at each of the 4 near sensible opportunities on daily climates for cross pairs, and we checked out just now the Euro Canadian there. So we have exhausted all of our near sensible opportunities as far as our scans are telling us. So now we still have time, so let's have a look at a couple of cryptos. Now, I haven't looked at cryptos in a little while, so let's see. Let's look at, I always go to Bitcoin because obviously it's the most famous one. And I've just clicked here the top one. Just to show you, this looks like, go back to the weekly. Great, we would have actually, so 6th of July. No, we would have cancelled that trade. I need to go in and edit that. Let me look at it on a different broker. Let's look at it on Coinbase. Okay, so I tend to look at cryptocurrencies on bigger time frames because they tend to move a lot more, right? They tend to be a bit more volatile. They also tend to have huge spreads, which can mean that the tighter the risk, the more likely we are to just be stopped out by bad luck. So we want to avoid that happening. So I'm looking at a weekly chart now on the left, meaning I'm looking at a 144 on the right, but I will also look at a daily, a 2-day and a 3-day chart on the right-hand side as well. So thick red dot, probability down, got a little way to go before we have buyers. We have an EMA at 21,699. Definitely don't have that here. Let's have a look at the daily, 2-day and 3-day. Nothing there, not lining up in terms of the UFO on the right-hand side coinciding with the EMA on the left-hand side. You'll notice I'm doing the exact same thing. Exact same thing with cryptos as I would be doing in Forex and spot Forex, looking for the opportunities in the same way. Where do the probabilities lie, up or down? Using AutoClimate to help me. Thick red dot, probabilities are down, I should look to sell. If it were a thick blue dot, probability would be up, I'd look to buy. Then I'm going, where's the EMA? Do we have a UFO on the right-hand side that coincides with that? If so, place the trade. If not, don't. So it's the same application. There'll be slightly different variation. For example, I'm obviously using bigger time frames here. I would also be much more lenient. That's probably not the right word, but I would give more space to my stop losses as well. Again, to give it room to be volatile. So nothing on Bitcoin at the moment. Ethereum has some stuff going on. So let's take a look at Look at ADA. So that's got back down now into the zero. So let's avoid that. Let's do Litecoin. Again, I'm just clicking the top ones here. So again, this looks like something I placed last time. I'm going to use a different platform so we see a nice clean chart. So on Litecoin, we have a thin, make this bigger so we can see it, thin dot, which means no trade. Let's have a look at, I'm just trying to think off the top of my head here. So Bitcoin Cash. Trying to think of the, is it BCH? Oh, we'll look at that. Yeah, Bitcoin Cash. Again, thin dot. Looks like cryptos, a lot of them seem to be not necessarily turning around, but undecided right now. They've got to a place where they are, after weeks and weeks and weeks of probability down, starting to go, maybe not, I'm not sure. So again, keep out of it. If it's not sure, keep out of it. It becomes more of a gamble and more of a guess. Now let's just think of a couple more that we can look at. If I do USDT, then we can see, so we've got ADA. Let's have a look at Ethereum. So Ethereum is going through a merge at the moment. So not necessarily helpful, but okay, same thing, thin dot. So I said we'd look at some cryptos and perhaps play some trades, but as we look at them, we have to be led by the statistics. The statistics that AutoClimate tell us is that we do not have probability in either direction. That's what a thin dot on AutoClimate tells us. So there's no point trading. It becomes a guess. If we don't have probability confirmed upwards or downwards and we place a trade to either buy or sell, it's a guess. If we had probability up or down, then of course we'd follow the rest of the rules to see if we have other things lining up to place a trade. At the moment, we don't have either probability in either direction on pretty much any of these markets that we're looking at, or even on the one that we did, which was Bitcoin itself. We didn't have our UFOs line up. So again, we don't place a trade for the sake of placing it if it's not hitting our criteria that's based on adding probabilities, likelihood of winning a trade. So we did the best that we could. We've placed now 4 trades. I think it was 4 trades. It might be 3 trades still. 3 trades still. So we placed 3 trades today, a little bit more quiet than usual, but we have placed them following our rules. We've got different timeframes that we've looked at, completely different to each other. So we're not doubling up anything here. Again, check FX Street and choose based on your risk tolerance what you're going to do about that information. But be aware that some of the markets that you might be trading, some of the currency pairs you might be trading, may see extra volatility based on this news. So you've got tradewithufos.com/Becky, so you can come and track this and see how these trades develop, and have a look. If you scroll to the right, have a look at snapshots and explanations of what's happening. You can also from here book one-on-one coaching if you like. There's also apps and courses and group coaching you can check out. And at the bottom, you've got a question and answer section, which most of the time means that the question you have has already been asked. The answer is already there, and you can learn from other people's questions and the answers that we give. If you have a new question, by all means post it and we will answer the question there. Or you can email me, becky@tradective.com. And as you would have seen throughout the session for the banner that's on the bottom there, we do have a book that has essentially all of our methodology in it and explanation of what's going on behind the scenes of how these things work, why we do it that way. Jose and I worked very hard on putting that together, and it is now released. You can get an ebook version for $3 something. Check it out on Kindle, on Amazon, on different places. You can also get the paperback version, which is obviously more expensive, I think $16, $17, but you can check that out and see what you prefer to do. It will help you to have a guide to go through step by step, and it builds it out as you go through. So hopefully you guys find that helpful. Otherwise, let me know if you need anything, if you need help, if you need extra explanation. I'm here to help. Please contact me in the ways that you've got available to you that I've explained. And I will see you next time. Take care. Bye-bye.